Hello, and welcome to another update video about Ethereum. I think we can keep it short and sweet here today. Ethereum really is in the same pattern as yesterday. So if you watched yesterday's update, then you know that I've been highlighting, actually the updates of the last few days, because it hasn't changed, right? Then you know that I see Ethereum as possibly in a triangle pattern. I'm considering this, for example, for other cryptocurrencies as well, specifically just to name one, Solana, for example, yeah, could also be in a triangle, pretty much following Ethereum's wave count there. Not exactly, but Ethereum, for example, started the correction here early in December, whereas Solana, I think, in November. So it's not, perfectly aligned, but they both are in some kind of a consolidation pattern. A pattern of indecision. And that's what we see on other cryptocurrency charts as well. And I mean, what does that mean? See, all it means is that the market hasn't really given us a clear confirmation if we get another low or not. For example, in this A wave that I'm tracking here to the downside, an A wave can be a 3-wave move. An A wave could also be a 5-wave move. So that's important to understand. Either way, it is possible to get here one more low to complete this move here. And as long as we are holding within the triangle, within the sideways triangle, that is going to remain a potential. And what would be a breakdown confirmation? So I see this as a potential internal fourth wave. It's going quite massive. I mean, maybe it's something different. Maybe it's an internal B wave. Maybe even this B wave I'm tracking here in the orange scenario is actually the triangle. It's just going to go a little, it's just going a little bit, it's just going sideways essentially, right? So maybe a little bit too large for an internal fourth wave, but it doesn't make a difference in the short term. So what I want to highlight is that there is a triangle, whether I label it wave B or something different, it doesn't really make a difference. It's just a label. Important to understand is that there are clear rules around Elliott wave triangles. And to keep this triangle, which would break to the downside, alive, the market needs to hold below the C wave high, which is at $3,550. Which means only a break above that level will indicate that something different is playing out and not the yellow scenario. As long as the market stays in the triangle pattern in the sideways range, the yellow scenario seems to be in control. But I will not rule out a push higher. I mean, essentially we are talking about two scenarios here. Both of them, however, indicate that this would be a corrective bounce or a corrective rally. And it's outlining clear parameters for this corrective bounce. If the consolidation continues, then obviously there are clear parameters, clear boundaries for this triangle to observe, which I just mentioned. I mean, to the upside, it's that 3,550 level. To the downside, breakdown confirmation, the first indication would be a move below the D wave low at $3,310. Okay, it's the first one. And the next one would be $3,215. Further confirmation. And that would confirm we're going down more directly. A break below the upper red line would only mean that the triangle could simply extend, yeah? But then, okay, what happens if we break to the upside? Well, it's not necessarily going to be directly bullish. It would certainly rule out the yellow scenario. It would certainly make a more directly bullish breakout. I mean, talking about a direct move up to all-time highs more possible, or more probable rather. Anything is possible. But first of all, we would have to rule out the orange scenario during which just a larger corrective bounce is unfolding. And why am I considering this to be just a corrective bounce? Well, I mean, we talked about that white scenario, right? The white count is here the idea that a larger 1-2 setup formed and the wave 2 bottomed around the 20th of December. It's on the chart. It's valid. It's just that here we haven't really seen impulsive action to the upside. I mean, this here could be an impulse, this move up, that happened after the 20th of December. But anything after that was really just a correction. So, while I'm definitely considering the white scenario, I would want to rule out the yellow count first. And then I would need to see how the market reacts to the next pivot this area here, which is the next target area for the orange, larger, more extended B wave between $3,688 and $4,011. So for now, nothing changes. I mean, we're only taking a look here at the shorter time frame because the big picture completely unchanged. And therefore, I think the immediate focus just needs to be on the parameters of the range. And then if we go down, the next target is here, the $2,923 level. And to the upside, it's the blue zone, which I already mentioned. So we have to be a bit patient, but the weekly candle close is coming up. Actually, the last weekly candle close of this year. So be ready for some volatility. And I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.